Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And today I want to take a look into the Q3 numbers of Electronic Arts EA, and it's one of my positions in my portfolio, and so of course I take a look at the quarterly earnings, and so I will do with you today, and then I will tell you what I will do with my stocks in Electronic Arts. Electronic Arts reported their quarterly earnings on Thursday after the close of the market, and they came out with quarterly earnings of 29 cents per share, beating the SEX consensus estimate of 2 cents per share. This compares to earnings of 96 cents per share a year ago. These figures are adjusted for non-recurring items. Over the last 4 quarters, the company has surpassed consensus EPS estimates 4 times. Electronic Arts, which belongs to the sex toys, games, hobbies industry, posted revenues of 910 million for the quarter ended of September 2020, missing the sex consensus estimate by 4.77%. This compares to year ago revenues of 1.28 billion. Electronic Arts shares have added about 16.6% since the beginning of the year versus the S&P 500 gain of 6.6%. So overall, earnings are better than expected, way better than expected. Still also way under the year ago numbers. And on the revenue, they missed quite a bit. So overall, I would say solid numbers under still difficult circumstances. But anyways, on Friday, the stock dropped 7% to $119, which was a massive drop, maybe kind of an overreaction. And the question is, why was this big drop? And therefore, I wanted to go with you to an article of the Motley Fool, and they try to explain why there was this big drop. And they say investors, however, appear to focus on EA's guidance for the third quarter in fiscal 2021. Management guided for Q3 and full year revenue of 1.675 billion and 5.625 billion respectively. That was well below Wall Street's expectation of 2.35 billion and 6 billion. So I guess this lack is the reason for the big drop, the lack of the guidance. And EA's lackluster guidance was surprising, as most video game companies have experienced booming demand for game downloads and higher player engagement during this pandemic. EA's disappointing sales forecast made investors question whether these customers' behavior trends in the gaming industry will last. What happened to the expected growth in this industry? It seems like with the guidance EA gave here, the market is not very happy, and therefore we have this drop. In turn, some investors view EA's new dividend as a tacit admission by the company that its days of heady growth may soon come to an end. Maybe yes, maybe no, who knows? But this seems the reason for the big drop on Friday. The question becomes if it's time to buy more of Electronic Arts, or is it time to sell? When I calculated intentionally my intrinsic value in my first video, we wasn't in this big pandemic situation, or at least nobody really knew what happened there. It wasn't expected that year over year their earnings will drop that big. So my original intrinsic value was way higher. Now, when I calculate the intrinsic value now from the current situation and the current earnings, I come to an intrinsic value of around $130. And so it seems like Electronic Arts is a little bit undervalued, not too much. For me right now, it's not the time to add more, but if Electronic Arts will go under $100, then I think I will add even more shares of these great company with a great outlook in my view. And the reason for my optimism is that I still believe that the global games market will grow over time, and EA have a good market position in this gaming market. And so I'm positive for the future of the whole sector. Remember, I also have Activision Blizzard in my portfolio, so I'm very optimistic for the whole sector, and so I will stick with my position in Electronic Arts. And this position I opened around $100, $100.40 is my buy price, and so even after the drop on Friday, I'm still up 18%, which is nice. And as I said, I will not add at these prices. I will add if the price will go under $100, and otherwise I just stick with my position. And if you're new to my channel, here you see all the position in my real money portfolio, and you can find a deeper analysis of all of these businesses on my channel. There I look deeper into the company, into the business model, into the financial numbers, of course, and then I calculate the intrinsic value of every of these companies and explained why I bought into these companies. So feel free to check this out. If you liked it and if you have any value out of that, just subscribe to my channel and join me on my journey as a long-term value investor. And so overall, as I said, I think the growth in the gaming market is not over yet. For me, it seems like it just goes on and on and on. And EA have a good market position in this gaming market. And so I think there is a bright future ahead. So that's it for today. Thanks for watching. Please subscribe to my channel if you found any value and follow me on my way to financial freedom. And if you really liked the video, give me a big thumbs up and ring the notification bell to never miss another video. And tell all your friends that here is a community rising of long-term value investors with high quality stock research videos once or twice a week. So we will see hopefully the next time with another video and another analysis of another stock. See you then. Take care. Bye bye.